U.S. stocks plunged to their worst loss in 8 months on Wednesday as technology companies continued to drop. The Dow Jones Industrial Average fell 831 points. The losses were widespread, and stocks that have been the biggest winners on the market the last few years, including technology companies and retailers, suffered steep declines. Apple and Amazon both had their worst day in 2.5 years. The Nasdaq Composite, which has a high concentration of technology companies, had its biggest loss in more than 2 years. Alec Young, managing director of global markets research at FTSE Russell, said investors fear that rising interest rates and growing expenses are going to erode company profits next year. The tax cuts juiced earnings this year and that's not sustainable, he said. The market's starting to say that the glass may be half empty. After a long stretch of relative calm, the stock market has suffered sharp losses over the last week as bond yields surged. Stocks had come close to big drops in the last few days, but each time they recovered some of their losses. That didn't happen Wednesday as stocks fell further late in the day. The biggest driver for the market over the last week has been interest rates, which began spurting higher following several encouraging reports on the economy. Higher rates can slow economic growth, erode corporate profits and make investors less willing to pay high prices for stocks. The 10-year Treasury yield remained at 3.20%, about where it was late Tuesday, after earlier touching 3.24%. It was at just 3.05% early last week and 2.82% in late August. Gina Martin-Adams, chief equity strategist for Bloomberg Intelligence, said the stocks have become more volatile in the last few months because investors have concerns about their future profitability. Amazon recently announced they were increasing wages. Facebook is spending a ton on security, she said. Semiconductors have the most exposure to China out of segments in the S&P 500. Sears Holdings nosedived after the Wall Street Journal reported that the struggling retailer hired an advisory firm to prepare a bankruptcy filing that could come within days. The stock fell 16.8% to 49 cents. It was more than $40 5 years ago. Sears has closed hundreds of stores and sold several famous brands or put them on the block as it sees more customers abandon its stores.